Hi, my name is Antonio Newton, your local realtor with the Newton Group at Coldwell Banker, and welcome to Time to Talk Tuesday. In today's episode, we're talking about student loan debt and how that impacts your ability to get a mortgage loan. So we're going to talk about DTI, we're going to talk about credit score, and things of that. So stay tuned because you don't want to miss it.
Time to Talk Tuesday, where your local realtor, Antonio Newton, discusses the local market and common issues, providing quick solutions, creative ideas, as well as tips for investors, home buyers, and homeowners.
Jump right into today's content. Before we do, I'd like to take a brief moment and just remind you that you can catch all of our Time to Talk Tuesdays. So not only this video and this series, but we have other series as well on the selling process, as well as other information for sellers and buyers on our YouTube channel at TNG The Newton Group on YouTube. And feel free to also like and share and connect with us on Facebook. And make sure you click that bell so that way you subscribe and get notified of anytime we release new video content. I also like to thank our sponsors, Better Way Properties, as well as ColumbiaNortheastHomeshow.com. Thank you so much for your sponsorship. So let's dive right in. Today we're talking about student loan debt and how that affects your mortgage loan. So we're going to go over some raw numbers, then we're going to talk about if it really affects your ability to buy a home directly. So did you know that in August of 2021, the student loan debt for all of the U.S. was $1.73 trillion, with a T, trillion dollars. There are 44.7 million people in America that are right now affected by student loan debt. What an astonishing number. The average student loan debt amount is $37,172, with the average student loan monthly payment of $393. So when you think about that, that can have a big impact on your financial future, your ability to buy a home, buy a car, or even get credit cards and things of that nature. So obviously, we know that right now the mortgage rates have been at a historic low. And what that is doing, that is creating a desire for a lot of renters or younger people, college student, graduates, to be able to purchase a home. Because one, is cheaper than renting, and then obviously it is also still a good investment. And you got to think this student loan debt is affecting a lot of people who may have graduated and couldn't get a job in their desired field, or maybe they didn't even get to graduate at all just because of life. So now they have this student loan debt. They're trying to buy a house, or they want to buy a house. They have the desire, and they're like, where do I go? And we can see from our vantage point that there's a high demand for this type of home in the marketplace. The biggest shortage is between the 100 and 250,000 price point in our market, which is that first-time home buyer marketplace. So with all this being said, giving you some background and some numbers, does it affect your ability to buy a home? Well, not directly. So debt is debt. And it's still going to factor in, just like credit card debt, more or less, when they're going to look at your current monthly payments and the balance owed and how much you owe. But where it does come into play is the critical issue when you're looking at student loan debt. You're looking at your DTI, which is your debt to income ratio. So what this is, this calculation is made by adding up your current debt payments as well as your anticipated mortgage, and then you're going to divide that number by your gross monthly income. So you add up all your debt. So this will not count utilities or anything like that, just your debt, your monthly credit obligations, and you divide that by your gross income. So if your debt to income ratio is over 43%, it's going to be very challenging to get a home loan. And the reason why is because you got to think that we're using the gross number. So that's not what you bring into the house. And then of course, it's only factoring in your credit obligations. You still have phone, you still have cable, you still have internet, you still have utilities, you still have water, electric. as well as you still have to get clothing for yourself or for kids, for your family. You still got groceries, you still got gas. So there are still other financial obligations that you have to keep your life running that aren't included in your debt to income ratio. So the ideal spot is you want to be at or below 36%. The maximum for monthly payments related to a mortgage, according to most experts, should be less than 28%. Now, we don't see that a lot right now in our marketplace. But the thing is, you don't want to be what we call house poor or stretch yourself so thin that, one, you don't have enough money to save because emergencies are going to happen. You're going to need a rainy day fund. So even though you purchased this home, you still want to be able to have your Starbucks coffee and go on vacation and do other financial things. So you want to make sure that you don't spread yourself too thin so that you can still afford the lifestyle that you want while still being able to take care of your debts. Now, if you have student loans, federal student loans, you could opt for a graduated or an extended repayment program. And what that does, you will still have the same principal amount, but it will take you longer to pay, which means that it's going to lower your monthly payment, which in turn is going to lower that DTI percentage, that debt to income percentage, and that may allow you to qualify for a home loan. This past summer, FHA changed their guidelines, so they used to calculate 1% of your principal balance as your monthly payment. So, for example, if you had a $37,000 monthly payment or balance, then they would calculate a $371 payment. Now, as we know, oftentimes that payment is lower than 1%. So when they changed this guideline this past summer of 2021, they're going to actually go by what your monthly payment is rather than 1% of your balance. So this is going to open up the opportunity for a lot of people to maybe be able to qualify for a home loan that couldn't before. So if you're in that situation and you think you may be able to apply with this new information, give us a call at 803-608-2597. But the big thing also is the credit score. So student loan is just like any other debt. It's going to affect your credit score. So if you're not making those payments or if you got behind, that could affect your credit score, which could also in turn affect your ability to qualify for a mortgage loan. FHA obviously has lower credit standards, so you may qualify for an FHA loan rather than qualifying for a conventional loan. So if you are in the market to potentially be able to buy a home, first-time home buyer, if you have student loan debt questions, give us a call. We'd love to be able to help you. 803-608-2597. So this information, I hope you found it valuable. I hope it was informative. And if there's anything that we can do to help you, whether buying or selling a home, then we'll love to be able to have that opportunity. So we look forward to talking with you soon. And until next time, stay safe. So what does this video mean for you? Well, that largely depends on your position. It would be highly unfair for me to try to predict how you can utilize this information to benefit you and your family, or maybe someone you know. But what I can do is invite you to give us a call or shoot us a text or email, and let's have a conversation. Let's just have a quick chat to see where you're at, and then maybe if we can work together and help each other. There's no obligation, just to reach out and get some quality information. And feel free, once again, to look at any of the other videos, because it may be also addressing the same topic that may benefit you. But until then, I look forward to your call. And if there's ever a topic you want us to discuss, then please reach out, because we'd be more than happy to cover it on our next episode.
This episode of Time to Talk Tuesday was brought to you by the Newton Group at Coldwell Banker, where nothing works until we do. Look for our episodes every Tuesday where Antonio Newton discusses the local market and common issues while providing quick solutions, creative ideas, as well as tips for investors, home buyers, and homeowners. If you'd like to reach out to us, we can be reached online and on land at area code 803-608-2597. So until next time, here's wishing you all fair winds, following seas, and gentle tides.